Alright guys, it's been a while since the last time they actually covered what's happening on the euro dollar. Not talking about the past time, but strictly focusing on what's happening right here, what we looked for, what already took place, and what we will be looking for next. Now, to understand the whole context a little bit better, first thing that I want you guys to remember is that what we looked for here on the quarterly time frame is focusing on this high and this low. We wanted to see price start climbing into the premium of this dealing range right here. So what we have here on the upside, this red rectangle is our premium zone. What we had in mind after price gave a tiny liquidity shakeout right here, running buy side, running sell side into bullish PD race. What we wanted to see is price focus on this buy side liquidity right here and start pushing into the premium. So when we talk about premium, for a reaction to take place, for a bearish reaction, for price reacting to a specific level, what we want to see is not only price run a specific liquidity pool, but we also want to see it run into opposing PD rate. So what we have on that side, inside of the premium here of the quarterly time frame dealing range, the main area that we focused on was this BPR. And I'm talking this bullish imbalance filled with bearish imbalance. So if we focus on this level right here, notice what happens and notice where price is at right now. So we had this massive run to the upside, which you can see was almost 1,500 pip run. So if we drop to the monthly time frame, once price started this whole liquidity shakeout thing, running some buy side, dropping to the downside, running all of this low resistance sell side liquidity right here, dropped into the monthly bullish fair value gap, rejected the consequent encroachment to absolute perfection right here, and started pushing to the upside. This is what we started focusing on, this buy side liquidity here, and tiny drawn liquidity type of a thing was this quarterly BPR, which on a monthly time frame is also a BPR, just a little bit more refined, smaller area of this bearish fair value gap, overlapping bullish fair value gap. So what we have is this same exact DPR, just that on the monthly time frame it's a little bit smaller. So now once price reached into this thing right here on April, what we started talking about right away is that most likely what we are going to see is a bearish reaction. So when a bearish reaction takes place, this is when we can look for potential scalp opportunities to the downside. Now, why do we look for scalp opportunities? Simply because the main wind on the higher time frames right now is to the upside. Price ran to the upside, gave loads of consolidation, ran some sell side liquidity into bullish PD raise, bottomed out, and gave another expansion. So what that means is very simple. Price runs until it takes out some major buy side liquidity pools, until it runs into opposing bearish PD raise, then it reacts or reverses completely. In this case, what we expected for is a simple reaction, because obviously we are not sure if we're about to see just a massive type of crash right here. It wouldn't really make any sense, at least when talking about the current overall situation that we are seeing take place in this world right now. This is again why inside of this whole area right here, what we were looking for is to be long, looking for bigger day trades, because in this case we were trading with the daily momentum on our side. We were not looking for scalp positions, we were looking for full day trades, classic buy days, obviously waiting for daily time frame to align with the lower time frames, and that's where we looked for these bigger targets, trading with the main flow, etc. When talking about the bearish side right here, this is again where we would be trading against the main flow, against the main momentum, and that's not what we want to do. So when price reached into the BPR, they stopped looking for longs, and this is then they started focusing on the short side, looking for a simple reaction. Now, when talking about a reaction, not sure if you guys remember, but what usually happens then price runs tons of buy side liquidity and runs into a clear opposing PD ray, which again in this case is this quarterly monthly balanced price range. What we do is we at least want to see price retraced into 20-30% of the entire expansion. So what we do from the very low right here to the high of where price start to retracing, forming this April candle, what we wanted to see is price retracing again into the zone of 20-30%. That part will be a lot more clear from the weekly and daily time frame, so let's do exactly that. So I think it's better visible now, and they had quite a few zones right there overlapping this overall situation. At first looking for this smaller expansion right here, but coloring the entire expansion too, giving us the first zone and the second zone right here. The second zone, the bigger one from the weekly and monthly perspective, is aligning and overlapping with this bullish fair value gap right here, which became our main target, main draw on liquidity on the downside. I will attach a few screenshots from our recent analysis inside of our community. So you can see that from the weekly perspective, what we wanted to see is price after topping out, start reacting, run into the first zone, and eventually reach into this weekly bullish fair value gap right here, the high of it's acting as the main short-term draw on liquidity. And these two candles right here, the bearish ones, was very wanted to see bearish scalp setups to take place. Now, to be even more exact and to have even more detail in the overall delivery and what we were looking for here on the daily time frame, again, I will attach everything that we looked for inside of our community. So once price expanded into the quarterly BPR right here and started reacting to the downside on this day, what we wanted to see is price start dropping towards this low right here, which is where the weekly bullish fair value gap starts. Once we had another candle on the downside right here, and after that we got a few sideways days, what we got right here was a confirmation of a bearish fair value gap, which if we look left, it had a bullish imbalance as well. So that makes it a tiny BPR here on the daily time frame. So now once this day closed right here on this day and this day right here, what we wanted to see is price reach into this daily BPR right here, and after that form a top and from there start dropping towards this sell side liquidity here and the high of the weekly bullish fair value gap acting as our main draw on the downside, which is where we wanted to see short scalps to take place. So that's exactly what we saw, price running higher, reaching into the daily BPR, because again, price in order to reach towards something bigger, it has to reject smaller targets and smaller draws on liquidity first. So for it to drop, we saw that price is very likely to reach and take out this buy side liquidity here of these 2 days, of these two candles right here, run into opposing bearish PDA right here, which was this daily DPR, acting both as magnet area and as a PDA from where we wanted to see price reverse, and attack this sell side liquidity here. I reach into the weekly bullish fair value gap high. So now if we look at this specific structure right here, you can see that price didn't end up fully reaching into the weekly bullish fair value gap high. And what I'm talking about, you can see that we have a tiny gap right here. Price didn't fully reach into this area right here. But if we go to the inverted DXY chart, if we go to the weekly time frame, this is what you go see. We have the same exact weekly fair value gap right here, and notice what happens. It fully reached into the high of this weekly bullish fair value gap, and what that means is that simply we have bullish divergence between these two structures, between this low and this low right here. So here we have SMT divergence. Now, does that mean that price must follow this SMT divergence and skyrocket from current prices reaching for this buy side liquidity here? That can very easily take place. First reason why is again that remember, this is a very classic bear trap type of a structure that we are seeing here on the DXY. When price gives an expansion, leaving lots of imbalance inside of this expansion. So what we are talking about is this expansion to the upside right here. It left loads of imbalance, this candle and this candle. After that, talking about a bear trap, what it does, it creates some short-term liquidity for it to run on both sides, upside and downside. And then it starts the liquidity sweeping. It runs the buy side, then runs the sell side liquidity into some of the bullish imbalance that it left inside of this first expansion from this low right here to this high right here. And after that, it usually starts climbing to the upside. A lot of traders confuse this expansion to the downside right here as a potential shift in delivery, but in most cases when we have this exact type of setting, price expanding, weaving imbalance, running the buy side, running the sell side, and starting slowly to build to the upside, this is the classic bear trap type of formation, and it likes to just simply gravitate and stop out a lot of early sellers. So this is likely what we are seeing right now. Absolutely nothing is guaranteed in trading, nothing is guaranteed in the markets, but as we have SMT and this bear trap type of formation right here, this means that we have a big liquidity pool. Again, remember that this is inverted DXY chart, so overall this is how it's looking. On DXY, what it actually is a buy trap, but obviously from an inverted chart it looks like a bear trap. But you guys know that I looked at inverted DXY chart just to simply be able to spot cracking correlation a lot easier compared to if you would have it on the opposite side. So you can see that when we have it close to each other, daily chart here on euro, daily chart here on dollar, you can see that dollar failed to take out this structure right here when DXY fully took it out right here. So that's divergence, and again now there's a high chance of probability probability that price will just keep on climbing right here, and in reality, of course, it will be dropping on dollar, causing euro to climb towards this buy side liquidity pool right here. Now, will that take place right away? That's absolutely not clear. This is when we simply want to see how lower time frames take place. If lower time frames switch into sharp bullish type of delivery, this is when we would have higher time frames and lower time frames fully in sync. This is full alignment, and that's when we have a green light to start looking for longs. If that doesn't take place and we see lower time frames stay neutral or semi-bearish, this is again when we most likely will see a deeper drop into bullish fair value gap, into weekly bullish fair value gap on the euro, meaning that on the dollar, what we will see is price climbing even higher in here into weekly bearish fair value gap here on the dollar index. So in such cases, again, we always have two moving plates. What we want to have is higher time frame plate to align with the lower time frame. The higher time frames are currently pointing that we should see a buy trap to take place here on the dollar index, seeing a drop seeking for sell side liquidity, meaning that price on euro should start seeking for this buy side liquidity right here. But again, for that to take place and for us to actually end up taking positions to the long side here on euro dollar, you would need to see full lower time frame alignment, and we have the higher time frame fully in sync with the lower time frame, and that's when we have the green light to drop to execution timeframes and look for potential entries. If you don't get that to the upside, then we simply stay on the neutral side, waiting to see if price here on the euro dollar will want to complete the job and actually end up reaching fully into the weekly bullish fair value gap or not. If it decides to do that, perfect, obviously, and we will be able to follow the lower timeframes, maybe even look for very quick in and out positions towards the high of weekly bullish fair value gap. If not, and we see price stay neutral, then we simply stay on the sidelines. But if we get price bottoming out here on the lower timeframes, maybe even forming a clear and nice Tuesday or Wednesday low of the week, then obviously what we would want to see from that point is this potential bull trap taking place here on dollar index, euro climbing towards this buy side liquidity right here. So if we would take dollar index right here and invert it to have a clearer view, we would want to see price here on dollar index nicely start climbing inside of this stays, giving our lower time frame alignment and keep on continuing towards euro buy side liquidity right here, which is this level at 1.15732. So that's where we are at regarding the overall bigger picture. This is what we looked for before and what we will be focusing in the future, looking to see how higher timeframes and lower timeframes align, which will dictate if we are going to stay on the silence or look for quick scalp moves or start riding the overall bigger direction, trading in alignment with the higher timeframe vision. So that's all for this one, and we will talk very soon. Take care, guys.